Good morning, everyone. It is Wednesday, July 13th, 2016, 5:06 a.m. Eastern Standard Time. This week, we're going to be doing a weekly breakdown analysis on a few pairs, and in this video, I want to implement fundamentals into finding your setups and just briefly go over how I personally look for my news and find out how to put that into the charts and actually be able to use that towards my analysis for the day. So right now I'm on a website called forexfactory.com. It's a free website. It has most of the news releases. I don't know, one day that this website actually did fail me. It's pretty reliable. It has a lot of reliable resources. I'll break it down real quick for you. So when you're looking for news, you have three different sets of statistics. You have a previous, which is the last month's results. You have the forecast, which is what people believe is going to be this month's results. And then you have the actual on the far left, which is what actually happens on the time of the release. So now to scan for news releases, you have to first go to the day that the news has been released. So as you can see, Sunday, July 10th has already passed, Monday has already passed, and Tuesday has already passed. So the news has already been made and already been determined. So these currency pairs that had these news are already in movement. And that's why you see a lot of volatility in certain pairs at certain times. Not because, George Soros put $6 million into it and he's trading right now, but mainly because a lot of people, especially fundamental traders, depend on the news for their trading reasons and decisions. And you should never solely depend on news just to make your own trading decision, but a lot of people do, and there's websites like this because of that. So today's Wednesday, and as you guys can see, the Japanese yen already had its move at 12:34 a.m. So around midnight is when they had their move. Yellow folder means means low impact news. Orange folder means medium impact news, and a red folder means high impact news. These are different degrees of impact. Yellow the lightest and red the most volatile. So whenever you see a red impact news, that's just indicating that that currency pair is going to have a lot of movement for the day. And as you guys can see, today's Wednesday, and it's about to be 8:30 a.m. in 3 hours, and the United States dollar has medium impact news on import prices. Now, one thing you do is you can click on the folder. You can see more information and more detail as to what it is, what the type of impact it is, why is it happening, and how often and frequent it actually happens, and what happened in the history of it. But as I said, that's too much information. You don't really need all of that to be able to make your decision, and save that for the fundamentalists that want to sit around websites like FX Street and mark up charts all day and just never take a trade. So basically, I'm going to look for a couple pairs in this video just for time's sake and break them down. So right now you guys can see the USD has movement, but the CAD has a lot of red folders. The problem with the CAD, Canadian dollar, is that the red folders don't open up until 10 a.m., meaning that the volume is going to be pretty low until then. So now when I go back to my charts, I'll actually expand the screen so you guys can see. Okay, so open up the charts. I'm on my NZDUSD currency pair currently, and right now what I have opened up is a line chart. You guys probably get three different options. You get a line chart, a candlestick chart, and a bar chart. I really like using a candlestick chart because it has a lot of detail, and those of you who purchased my course, you guys are taught about candlestick analysis and price action analysis and how you can use different variations of candlesticks to determine breakouts and pullbacks and fake outs and so forth. But again, that's something I go more in depth in the course. And let's just jump right into this pair now. So I put it into the candlestick. I can see that right now the pair is currently formed a double top on the longer time frame, and right now it's in the uptrend. That's the only thing I could tell. Higher lows, higher highs, and currently on the past hour bar it seems to be very bullish, so I had entered a buy. Reason behind my trade is I already had a buy bias from before, and this pullback plus this huge volatile bar right here just added confirmation that the market will go back up. I got a couple questions regarding stop loss placement. It was asked in the green room, and hey, welcome Comfort. Just have a new member just joined just now. Welcome to the group. Hopefully you get to see this video and jump in with us this week. But back to the analysis now. Let me bust out the 4-hour chart because I like looking at the 4-hour time frame. It's a very, very stable time frame. There's less movements, because each candlestick moves every 4 hours, so it'll finish every 4 hours. So this candlestick has been 4 hours worth of activity. This candlestick was 4 hours worth of activity. I pull my crosshair out and I measure back the past 1, 2, 3, 4 candlesticks. That's 4 hours. That's the past 16 hours. So if I go 6 candlesticks back, that's past 24 hours. So as you guys can see, within the past day, it reached its high of the day, high of the week, and it pulled back. And it's been pulling back since for the past day or so. Those of you with your stop loss placement about 30 pips below the entry, you're going to get stopped out because the market makers, they know exactly where people put their stops. There's a lot of tools that inside institutional traders use to be able to grab your stops and be able to make it the worst experience trading ever. But as you guys see, market makers pulled the market back about 88 pips from the original entry. And again, those of you with a 30 pip stop loss, you would have been stopped out around this zone right here. Those of you with like a 60 pip stop loss would have been stopped out around here. Those of you with a 100 pip stop loss, you're chilling. You're like way, you're 20 pips away from the low of the day. Stop loss number, like, there is no standardized number for a stop loss. You should never have a trading system where you're only taking a certain amount of pips for every stop, because every setup is different. For example, if I wanted to take a long trade, right, for this, the past couple days, looking at the 4-hour chart, and I wanted my stop loss to be down below around 0.71996, if I had put a 30 pip stop loss from up here, it wouldn't make sense. My setup would not have enough time, have enough room to breathe, have enough, as I said, have enough time for the market to actually make a move to, balance out price and give me a good edge. And so that's the reason why I use large stop losses mainly, is to give me the higher edge. A lot of times you'll know that you're right in the market, and you'll see the market go in your direction or go against you just a few pips past your stop, just to start to reverse and go in your direction. And you probably get angry afterwards and realize, like, why is the market doing this to me every single time? It seems like I'm pretty good at predicting and I'm right sometimes, but the market makes me seem wrong. There you go. It's because your risk management isn't properly taken care of. And I do go over that in my training course, how to use your stop loss placement, risk management, money management, how you should be able to leverage your money so you can take any trade you actually want. Because to be honest, you can't trade any setup you want. It all depends on your setup and your approach to the market. But let's break down this pair now. Here's an NZDUSD currency pair. I want to go from the most recent swing low to the swing high and go from there. So as you guys see, this was the swing low. I'm actually going to do it from right here. And there's a swing high. You guys see that it tapped the 100 Fibonacci zone from this retracement. And it's still very bullish because it's still above 38.2 Fibonacci zone. I don't consider the market to become bearish until it actually, it pulled back. It needs to breach 38.2 and continue downwards, and that's where my stops are placed, above the 50%, below the 38.2 Fibonacci zone, and it gives me enough room, enough comfort for me to be able to see the market freely, test out a bunch of different strategies that I want to implement, such as the Fibonacci tool and trend lines, and whatever I want. So after this, you guys will see that it's formed a double top, but at the same time in the making, if you didn't notice, it's also formed a double bottom. In order to find this double bottom and make it more visible, you have to go down the time frame, because as I said from earlier in the video, each candlestick on the 4-hour bar is 4 hours. So I'm gonna go down to the hourly chart now. So now you guys can see a little better. Yes, it's a double top, but at the same time, there's a double bottom that's been formed. A double bottom is validated once two lows are formed. One of the lows has to be a higher low, and a brand new high is made. So this is just a double bottom in the making. It's not necessarily a full double bottom yet. What I'm waiting for, and what you guys should wait for, I'm already in the trade because I already had my other reasons, other confluences why I entered the trade from the other day, but I'm going to draw a simple trend line from opening to opening, and then I'm going to pull out my crosshair and I'm going to do a measurement from current price to where I need to enter. So the market is about 53 pips away from my entry. Once the market hits around this zone, around the 0.73433 zone, that is when I put an alert there. That is when I should be looking for an entry. It's going to breach the 0 Fibonacci zone, meaning that the uptrend should resume, and my profit target, basically, I break it down risk reward wise, and I'm risking 158 pips, so my reward, I want to get at least 75 pips, 75 pips. So as you guys see, my reward for this pair is 80 pips for that trade, and I have another 0.15 where the price is currently at, and that is 102 pips. So I have a total net profit, definitely over 150 pips, and that's just off of this pair alone. Now I'm gonna go back to the news, and I'm gonna break down one more pair for you guys in this video for time's sake, and explain to you in a moment. Alright, so I was going to break down the AUD/USD currency pair, but my max limit is 15 minutes for videos. I will make another video on the breakdown of this pair and a couple other currency pairs when I do see them. But for time's sake, as I said, I'm going to have to wrap the video up. If you guys have any questions, please email me at forexcapitalmanagement@gmail.com or send me a message via WhatsApp at +1-860-759-3387, and I will get back to you as soon as possible. Right now I'm doing a deal. The Forex Mastery Currency Trading course is currently $499.99. That's a one-time payment of $500, and in the course you get to learn everything that it took for me to get to the point where I'm at right now. It's all data that is very, very helpful. I explain this in all the time. I highly recommend this to all of my students, current green members. Please definitely take advantage of this opportunity. One thing that hurts me a lot is seeing a lot of ambitious individuals enter the Forex market and lose a lot of their money and get discouraged and end up quitting. That's not good. So that is $499.99. If you guys have any questions on that, please contact me, and you guys have a good day. Thank you.